What's up, YouTube fam? Welcome back to the channel. Tapping in with your boy Jamal, aka the Credit Protector. Where on this channel we discuss all things credit, baby. We talk about consumer credit so you can stay protected, know these laws out in these streets, personal credit because you need to build that up so you can get over to the business credit. And as I learn more and more, I'm gonna be sharing this and sharing the gems, dropping the gems with y'all. The same thing that you probably pay thousands of dollars for, like I have. I'm gonna be sharing it right here on this channel. I want to help you grow, especially if you're an aspiring entrepreneur or young entrepreneur new to the game like myself. And this building business credit, building personal credit, forming your business is confusing to you, man, tap in with me. Let me help you. Click the link in the description below. That's www.crackthescore.com. Grab the free ebook, book a consultation, and rock out with your boy, all right? Let me help you. Now we got all that out the way. Today we're going to be talking about the difference between personal credit and business credit. A lot of people don't realize that businesses have their own credit, right? You probably just heard about things like venture capitalists or angel investors, or you may have looked at Shark Tank, and you probably heard that, it costs a lot of money to start a business and people can invest so much of their money in the business. Or maybe you started your business with your own personal money, whether it's, taking a loan out, a HELOC against your home, or taking out personal loans, or running up your personal credit cards. You didn't even realize that you could actually get funding for your business in the name of your business. And that's business credit. But let's talk about some of the differences between personal and business. To make sure I don't miss anything, got my notes, you feel me? Gotta make sure your boy stay on piss on with y'all, So first and foremost, with your business credit, you have an EIN number, okay? That stands for Employer Identification Number. On the personal side, you have a Social Security number. Both of these are considered tax ID numbers. So when you see that on a application, your tax ID number, they're asking you for either a social or your EIN. How credit utilization is looked at and calculated. Credit utilization is so credit utilization is important on both your personal and business credit, but it has a much larger impact and a bigger negative impact on the personal side as opposed to on the business side. Why is that? The reason for that is on the personal side, the average person doesn't really need a whole lot of credit, right? You don't need $200,000, $300,000 worth of credit to live your day-to-day lifestyle, the average person. And that's what banks think too. That's how they're thinking about this. You're like, well, you make 80, 90,000 a year. Why would you have 300, 200, over $100,000 worth of credit? It doesn't make sense for your income or your spending style. Whereas on the business side, it makes hella sense to have 200, 300, 400, $1 million in credit, because we have things like payroll. You have to pay rent for corporate or office space. You have to pay your employees. You got inventory. You got accountants to pay, lawyers to pay. All these different state and regulatory fees that you have to pay on a monthly, quarterly, annual basis. So it makes sense that as a business, you're going to need several $100,000 to properly operate, make payroll, ensure that all your employees got everything, the health insurances, all those things, right? Where a person, the individual, family of four, you probably don't need that much money, right? Or if you're a high income earner, you're probably still not using that much of your available credit. Also on the personal side, high utilization is a red flag to banks. They're saying, whoa, this person is using more and more of their credit and paying less and less of it off. This is a sign that this person could potentially default and not pay us back or go into bankruptcy. Okay. Whereas on the business side, they're not tripping necessarily about the utilization itself. They're more worried about your ability and how quickly you can pay it all back. All right. So speaking of paying it back, that transitions and gets us over to the next point, which is your payment terms. So on the consumer side, you have very favorable, lenient payment terms. Payment terms basically is how much time do you have to pay these people their money. On the consumer side, you typically, let's say you took out a loan, right? The loan is for 5 years. Term is also time. So the term of the loan is 5 years, meaning you have 5 years to pay this loan off. Now, when we're talking about the monthly payment, typically it's in between 21 and 30-day cycles. So, you're going to make one payment a month. And then if, for whatever reason, if you should never ever be late, but if you are late, it does not impact you until you're 30 days late. When I say impact, I mean appear on your credit report. It doesn't appear on your credit report until you're 30 days late. And then that's when your score takes like 100-point drop. Okay. So sidebar, never ever be late on any payments. Don't be late, y'all. On the business side, all right, the business side, it's even more imperative to make your payment on time. So when we're talking about the terms for business credit can be kind of ruthless because it's not regulated like personal credit. So on the business side, you can have some of these credit cards and some of these lenders, they want their payment as quickly as 7 days after they give you the money. So let's say it's like vendor credit, where you order something from like Uline or Granger, they send you an invoice, and that invoice says this is due within 7 days of you receiving it. Guess what? If you do not pay it within 7 days, your business credit score immediately takes a hit. It immediately tanks. Even if you don't have one yet, it immediately goes down. Business credit is all about how quickly you can pay your people back. The faster you pay them back, the higher your business credit score is going to be. Whereas on the personal side, yes, it is important to pay them back on time, but the speed in which you pay them back isn't calculated the same. You still are going to have that 21 to 30-day range. Whereas on the business side, you get this invoice, you want to pay it the day you get the invoice. You don't want to wait until the 7th day. They actually looking at you sideways and accounts against you if you take an entire 7 days, to pay back a 7-day notice. And on the business side, when they're talking about that, they'll use the term net. So you'll say net 30 days, net 60 days, net 7-day terms. And that's how many days you have to pay that bill off. Hopefully that makes sense, okay? Next is reporting agencies. So there are a couple of differences between the reporting agencies on the personal side and the reporting agencies on the business side. There are a lot of reporting agencies, period, okay, on both sides, but the main ones is still rather small. So on the personal side, you have TransUnion, you have Equifax, you have Experian, and you have Innovis. That's on the personal. On the business side, you have Dun & Bradstreet. Now, Dun & Bradstreet is the oldest credit reporting agency in the world, period. On a personal or business, no one's older than D&B. But D&B only does institutional credit, or aka business credit. Experian has and tracks business credit. Equifax also tracks business credit. And FICO tracks business credit. They also have, of course, you already know they have a FICO personal score, but FICO in of itself isn't a consumer reporting agency, right? They create a number that is based on the data from the consumer reporting agencies. Those are, two different things. But on the business side, they also create and produce a score for businesses. That FICO score is typically, this is just a sidebar, that FICO score is typically used by the Small Business Administration when you're going to get funding for your business, if you're getting a SBA loan, okay? So just keep that in mind. So those are the reporting agencies for business and personal. Now, you have your personal credit score and your business credit score. These are calculated very, very, very differently. So on the personal side, you have your 5 factors. First most important factor is on-time payment history. Second most important factor is credit usage. How much of your current credit card limits are you using at any given time? Next is the length of history that you have on your credit report. What's your oldest line of credit? Then you have credit mix. How many different kinds of accounts do you have on your credit report? Lastly is new accounts and hard inquiries. You want to keep those below 4 over the course of 2 years, but really under 4 at any given time on your credit report. Now, on the business side, we have a couple of different factors. So on the business side, you have how many trade lines, or what they call payment experiences, you have. So to even get a business credit score, you need a minimum of 3 trade lines showing on your business credit report, right? The more you have with positive payment history, the better. So how many trade lines you have. Next is how fast, like we spoke about earlier, how fast do you pay them back? So if you have a net 30-day terms, you want to be paying that joint back within like 5 days of receiving the invoice. You don't want to wait a whole 30 days. That actually counts against you and make you look bad. The size of your credit limit. The larger the credit limit that you have on the business side, the more impact it's going to have on your business credit report. Okay, those are really the main 3 factors. I would say a 4th factor, this is more so when you're going for like business credit cards, is they do look at your credit utilization, whether or not it is high or not, and also if you're paying it off in full every billing cycle that you have. So those are the different factors for your personal side and the business side. Now let's talk about the actual scores themselves. So on the personal side, you just have FICO. And we know that depending on which version of the FICO you're using, FICO can go as low as 250 and up to 900. That is just one model. The model that most of us know, which is FICO 8, FICO 9, that typically is in a range between 300 to 850. So you really have a range of 550 points that you're playing with. On the business side, it's each company has their own score. Bradstreet score, which most people talk about because Dun & Bradstreet is the big boy, is called your PAYDEX score. And your PAYDEX score is 0 to 100. 80 is good. An 80 score is good. 90 is great. 100 is perfect. And to scale up, going back to those 3 factors, the more accounts you have on your business credit, the higher your score will get. So if you have like 10 or 12 different trade lines and all of them are paid, you're probably going to have a Paydex score of 100. Then you also, Experian has its own scoring model that goes up to like the 400s, and so does Equifax. They also have their own scoring model as well. But Paydex is really the one that most businesses pay the most attention to. So Paydex scores 0 to 100. Okay, big difference than the personal FICO score, which is 300 to 850 or 250 to 900. Very big. Also, I mentioned earlier that the size of your trade lines is important on the business. It also is important on the personal side, but is not necessarily a factor of your FICO score. But banks do take into consideration how much money other banks have given you when they're thinking about loaning you money on the personal side. So that is very similar on both the personal and the business. The banks will kind of mimic each other when it comes to your lines of credit. So the higher your credit limits, the better. Even on the personal side, you want to actually make it a real goal to begin to have credit limits that are all over $10,000. Okay. Hopefully this all made sense. Let me know your thoughts about the differences between business credit and personal credit. Did you know all of this? Is this new to you? Do you have any other factors that you would like to add? Definitely want to hear from you all. Tap in with me, leave a comment down below.